Well, big week ahead for interest rates, y'all, and we are seeing that trend of lower rates continue. So we're going to talk about it in today's video. So we're going to dive right in and look at some numbers. Mortgage News Daily has a 30-year fixed rate conforming loan at 6.50% today. Y'all, that is a hair better than we were a week ago. We were at 6.52. 30 days ago, we were at 6.77. So rates are down a little over a quarter of a point in the last 30 days, which is a nice reprieve from where they had been. You have to go back to October 3rd of 2025 to find rates as low as they are right now. So we're sitting right at a 12-month low. Y'all are very close to it. So that's very good news as we go into the fall. I know things are typically a little bit slower going into the fall as kids are going back to school. However, we see a nice trend downward in interest rates, y'all, and I think a lot of buyers that are sitting on the fence may well dive into the market. That is a cautionary statement, by the way. If you are sitting back waiting for interest rates to fall further, understand that these rates are already predicting a quarter-point cut at the next Fed meeting. So if you're waiting for that Fed meeting on September 17th to see lower rates, really all that Fed meeting can do at this point is disappoint us because we've got a rate cut baked into current pricing. So keep in mind that once the news of rate cuts starts hitting the wires, a lot of buyers are going to be out there. That's going to increase the competition. And y'all, being in this for 30 plus years, I will tell you that when we have these market cycles, they are abrupt and almost instantaneous with regard to their impact on pricing. We won't see a small trickle into inventories being harder to grasp. You throw an extra 30-40% of buyers that have been otherwise sitting on the fence for the last 6 months waiting for lower rates into the market, prices immediately adjust higher, concessions immediately go away from those sellers. So this is almost the Goldilocks buying period time. Getting some benefit of rates dropping as they have without necessarily the news that rates are falling through the floor that's going to impact the market in a really negative way for buyers. So just something to keep in mind of, y'all. Waiting has a cost. I actually have a calculator that shows the cost of waiting. So if you'd like for me to run some of those numbers, I would be happy to. Here's what's moving the markets today. Christopher Waller, he is sitting on the Fed board. He is actually leading the list of contenders for the next Fed chief. Polymarket has him at a 34% lock for being the replacement Fed chair for Chairman Powell. That would be a very good thing, y'all. This man is very well respected. He has a very deep understanding of economics. In a speech he gave yesterday, he mentioned that jobs are far weaker than reported, and we're going to see further revisions. It's a cautionary tone. Big revisions are coming due to AI, he thinks, over the long term. He also thinks that tariffs should be largely ignored as a factor that weighs in on Fed policy because they are transitory and not inflationary. In other words, they affect pricing, but not the cause of higher pricing. They're just simply a cost that gets reflected, doesn't mean they're inflationary. So he gets that. We've talked about that many times on this video. And it's good that somebody that's running the Fed gets that fact because it's really important when you're making policy about what we're all going to pay for money. He further said that he views neutral, the place where the Fed should be that's neither accommodative or restrictive, at 3% on the Fed funds rate. Y'all, we're right now at 4 3/8%. So he believes we are a 0.375 high. That's almost a 1.5 higher than we should be given where the market is. And if we have further weakness on the employment front, he may want to see us more accommodative than that. So a 0.375, 1.5 decrease under his leadership is looking more and more likely. Again, just mention what that's going to do to demand, to the demand side of the equation in housing, y'all. So not necessarily a great idea to wait until it occurs. Refinancing is a thing. Buying at today's pricing with today's concessions and then using some of that savings to refinance it when rates move a year or two down the road makes a lot of sense, y'all. So I'm happy to run those numbers for anyone. PCE came in today. It's the reason I waited until today to do this video. Year over year, exactly as predicted at 2.6%. Market is flat today, dead flat in the bond market, even on a day where we would expect to see more volatility with a 3-day weekend. So the bond market is not hating that news. It's not really loving it either. But the fact that we got it exactly where we wanted it on PCE, or exactly as predicted rather, being viewed as good news on the bond market. No surprises on the inflationary front. In any event, I know that's a lot to digest, y'all. The CME FedWatch tool now has an 87% chance of a quarter point cut at the upcoming September 17th meeting. And as already explained, that's in the current pricing, y'all. So if you're waiting to see rates drop a quarter on September 17th, they already have. We were a quarter higher 30 days ago. So that is 100% due to Fed futures predicting this cut. If we get a surprise in the opposite direction, y'all, we'll see that immediately priced into futures trading literally that day, right? So if the Fed does not cut on September 17th, rates will be a quarter point higher on the 18th, guaranteed. So in any event, hope this is helpful for you and for your clients as we navigate a lot of interest rate news. I'm always here to have one-on-one conversations. Always honored to have your referrals. You got all my details on the screen. We'll talk to you next week.